Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Hey, today we're talking about industrial real estate, and we're talking about logistics. And next we're going to talk about investment sales market. We have Ryan Severino, Senior Economist with REIS, with us. And Ryan, let's talk about the investment market. What do you see for sales volume in the industrial sector, and how does it compare to the last several years? Has it really picked up?
Sure. The one caveat before we get into this, I would say, is we're still getting some transaction volume in for the third quarter, but I would say transaction volume continues to increase over time. This year, we're on about track to do about the same performance as last year, which is billions of dollars, tens of billions of dollars in escalation from where we were just a few years ago. The one thing that I would say though is that, however, if the rumored purchase of Incor by GIC, which is the big Singaporean sovereign wealth fund from Blackstone, is actually true, that's a huge development for the market. Anytime you see an $8 billion portfolio sale occur, in my mind, that would be a very, very strong signaling mechanism to the market that this is maybe the next property type that's ready to sort of take the baton from apartment as the most favored property type going forward. So I think I'm waiting to get confirmation of that deal, but if that goes through, that is a very, very strong signal, I think, to the rest of the marketplace.
Yeah, it would be. I mean, $8 billion here, $8 billion there. Pretty soon you're talking about real money, right?
Really?
And industrial market is hot. And so how is it trending compared to other property types? You mentioned, multifamilies have been hot. What do you see in comparison to the other sectors?
I'd say it has actually been outperforming other property types. We could actually see some declines in transaction activity relative to last year for some of the other property sectors. I think even with apartment, you're seeing some marginal cooling off. I don't think people are disavowing apartment altogether, but I do think the bloom is off the rose a little bit these days. But I think, looking at improving performance and market fundamentals that we discussed, that's really causing investors to increasingly train their sights on industrial. And I think, again, I do think it probably is the property type that's ready to step up and take that baton from apartment as sort of the darling of commercial real estate over at least the next couple of years.
And is some of that volume and some of that interest in industrial over multifamily, is some of that based on yields, on cap rates? What are you seeing for cap rates on some of these industrial properties compared to what's been hot, multifamily?
Not surprisingly, cap rates continue to compress. The mean cap rate, the sort of average cap rate that we see in the market, that continues to drift downward, really following the pattern that we've seen from the last few years. So I'd say, overall cap rates are probably in the sevens, but we are definitely seeing lower cap rates for higher quality assets and better markets. So I'd say, we're not seeing cap rates test sort of the same lows that we're seeing in apartment, which are nearing historically low levels. But the recovery in apartment started earlier than it did in industrial. So I wouldn't expect it to be at those levels just yet. But again, I do think this is the property type where there is really good potential, not just for improvement in fundamentals, but cap rate compression and increase in values going forward.
Well, that's quite a considerable increase in yield then, if you're getting in the sevens for industrial properties, because what are multifamily yields running now on average?
In the fives,
yeah.
And I would say in the really good markets, New York, San Francisco, places like that, we are still seeing deals go off at 2, 3, 4. But even a spread of a couple hundred basis points, given where industrial is in its recovery cycle versus where apartment is, I think there's room for that to compress, because I think over the next few years you will see cap rate compression for apartments really stall out and then probably start to drift upward over the medium term, where I think on the industrial side, I think the marketplace has longer for that cap rate to compression to continue to occur. And so I think you will see that spread between the two property types narrow a bit even further as we go forward for the next few years.
Yeah, and that makes sense, doesn't it? I mean, with online sales continuing to increase, I mean, that's a big benefit for industrial real estate, isn't it? And it's should create investor interest in the sector.
Absolutely, and as I'm fond of saying when I'm talking about this property type, industrial doesn't care through what channel goods are being sold, right? Industrial doesn't care so much if it's being sold via a storefront or if it's being sold via the browser on your computer or an app on your smartphone. All that matters is those goods need to be stored somewhere and then ultimately be distributed. So from the industrial market's point of view, any acceleration in consumption and sales activity is a benefit for the sector.
All right, so if you looked in your crystal ball, I know you have one, right? Look into the future, Ryan. What do you expect to see for cap rates on industrial properties in the next year or two?
I expect to see cap rates to continue to drift downward over the next few years. I would say, we shouldn't expect the same kind of cap rate compression that we've seen over the last few years, but, a drift lower, at least another 30 to 50 basis points over the next few years is a completely reasonable expectation to have. I'd say congruent with this, we expect values to continue to rise. NOI growth is actually expected to accelerate, which, will be a benefit for cap rate declines. So I think if you think about increased NOI growth and some minor cap rate compression, you are going to see increases in valuations over the next few years. And so I'd say for owners of industrial, this is a good time to be holding. I'd say for anyone who's considering investing, we're still in the early stages of a recovery here, so I wouldn't say you've missed the boat completely, but the boat is definitely leaving the dock.
And what do you say to someone that says that's two very big positives, right? Increase in NOI, decrease in cap rates. But what about interest rates? If we have a 100 basis points increase in the interest rates over the next year, how could that impact those values?
The good news is, in the short term, it shouldn't make much of an impact because if you look at what really moves cap rates, it tends to be growth or change, I should say, absolutely, change in NOI and risk premiums that really move cap rates, and then to a lesser extent interest rates. So as long as the economy is improving, NOIs are growing, and investors still feel confident about the property type to the point where risk premiums are at least stable, if not actually compressing a little bit, then that should actually cause cap rates to continue to go down. Where things start to reverse is if we start to see the economy slow down at some point in the next, say, 3 to 5 years, and then NOI growth starts to slow down and turn negative, and then investor sentiment starts to turn against commercial real estate, including industrial, that's when there could be some cap rate expansion. So I would say 1 to 3 years, not so much of a concern. 3 to 5 years is a little bit murkier. So I'd say short-term hold, long-term hold, you're probably pretty good. Medium-term hold, you need to sharpen your pencil and make sure that the deal you're doing is one that's really worth investing in, because there is a significant risk over that 3 to 5 years from where we are today that we do run into another recession, and that certainly would not be good for cap rates.
Okay, we're talking with Ryan Severino, Senior Economist with REIS, about the industrial market. And Ryan, so where do you see opportunities around the U.S.? I mean, you guys are looking at the performance numbers, you're looking at the cap rates on these different types of properties all around the country. Where might there be some opportunities for investors and developers?
There are a couple areas that I think are interesting. Number one, I would say over time, more and more port markets on the East Coast are really gearing up for the widening of the canal. I think even over the last year or so, we've seen more markets really become ready for that. I know they still have some development to do in infrastructure at the ports themselves, but the ports are in terms of dredging the canals deep enough and really expanding. I think that is a greater number than I've discussed in the past. I would also say that there is this trend toward large buildings it doesn't really show any sign of abating, and they're a little bit off the beaten path. They're not in the best port submarkets. They're not even in the best submarkets for the big intermodal distribution hubs, Dallas, Fort Worth, Chicago, Atlanta. And so I'd say as long as, and we've been discussing this, this is Pandora's box. As long as e-commerce continues to rise, there will be demand for those kinds of centers. And so I'd say, at least in the short to medium term, I think there's a lot of opportunity for investment and development there.
Ryan, thanks for joining us. Stay tuned for more on the Commercial Real Estate Show on logistics and industrial real estate. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Brokerage, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive suite of powerful commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Sozo Web Hosting and Cloud Solutions. Secure, reliable, and worry-free. Visit sozo.com. That's SOZO.com. FIU, Florida International University. Earn your master's in real estate online in as little as 10 months. Visit FIUonline.com. and by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. For more information on these great companies or for additional podcasts, videos, or blogs, visit creshow.com.